Welcome to Rushing, simplified news for busy investors. I make that for busy investors everywhere. Clear headlines, quick context, and only what truly moves capital markets. Today is Tuesday, November 4th. Let's dive into the 5 stories moving the world's money. 1. First headline. Amazon and Nvidia lead the global AI arms race. What does it mean? The AI boom just went global. Amazon announced a $38 billion partnership with OpenAI. Nvidia revealed a $15.2 billion data center investment in the UAE, and Microsoft secured new U.S. approvals for AI chip exports. Why magnify it? This marks a geopolitical and financial milestone. AI is no longer just a tech story. It's becoming an infrastructure arms race backed by state-level funding and corporate megadeals. Possible affected sectors: semiconductors, cloud and software providers, hyperscalers, AI infrastructure, energy and power supply, data center REITs. Second headline. $70 billion M&A wave shakes Wall Street. What does it mean? Mergers are back in full force. Kimberly-Clark's $48.7 billion acquisition of Kenvue headlines more than $70 billion in M&A announced this week. Deal activity is surging despite higher rates. Why magnify it? Corporate confidence is returning, signaling that companies are looking past Fed uncertainty to secure growth through scale. Rising deal premiums could set a bullish tone for Q4 equity markets. Possible affected sectors: consumer goods, healthcare, financial advisory, legal services, and mid-cap equities tied to acquisition targets. Third headline. Earnings momentum stays strong, but expectations rise. What does it mean? 80% of S&P 500 companies have beaten earnings estimates so far, with standouts like Palantir outperforming expectations. Tech remains the engine, but markets are demanding clearer 2026 guidance before rewarding further upside. Why magnify it? Earnings beats are losing impact. Forward outlooks matter more. If companies don't show sustained margin strength, valuations may face a ceiling. Possible affected sectors: megacap tech, software and analytics, consumer discretionary, industrials, and index ETFs. Fourth headline. Market breadth shrinks as indices hit new highs. What does it mean? While major indices continue to rise, more than 300 S&P 500 stocks fell this week, revealing extremely narrow market leadership. The same handful of tech names are driving nearly all performance gains. Why magnify it? A narrow rally makes markets fragile. One bad earnings print from a top-weighted stock can shake entire indices. Investors are rotating defensively, hedging concentrated exposures. Possible affected sectors: megacap tech, small caps, index ETFs, volatility products, and defensive sectors like healthcare and staples. Fifth headline. Fed uncertainty weighs on global markets. What does it mean? After last week's rate cut, traders remain split on whether the Fed will move again in December. Meanwhile, Australia held rates steady, and Japan's factory output unexpectedly declined, reflecting mixed global momentum. Why magnify it? The world's central banks are diverging. That widens currency spreads and complicates carry trades, a crucial setup for bond and FX traders heading into year-end. Possible affected sectors: bonds, currencies, global financials, exporters, and rate-sensitive assets. That was your 3 to 5 minute brief. If this helps, the best free support is to subscribe, turn on notifications, and share it with people to help them too. Links to all socials and the written brief are in the description.